They told us the records were lost, that the documents had disappeared somewhere between the wars, misplaced in the administrative fog of the 20th century. But the ledgers say otherwise. Inside a quiet archive in Basel, Switzerland, a different story waits in dust and ink. Pages stamped with dates, transfers measured not in millions, but in the quiet gravity of sovereign wealth. This is not a conspiracy. It is something far more interesting. A protocol. And at the center of that protocol stands a small institution with a remarkably large influence, the Bank for International Settlements. The public rarely hears its name. It does not issue currency. It does not lend to ordinary citizens. And yet, the institution quietly serves more than 60 of the world's central banks. For nearly a century, it has functioned as the meeting ground where monetary authorities coordinate the architecture of global finance. In the language of economists, it is a technical institution. In the language of history, it is something else entirely. It is a vault of institutional memory. And here at Erased Fortunes, we specialize in examining those memories before they fade. To understand why the Bank for International Settlements exists, we must return to a moment when the world's financial system was still recovering from catastrophe. The year was 1930. Europe was still staggering from the economic aftermath of the First World War. The Treaty of Versailles had placed enormous reparations obligations on Germany. Payments were scheduled across decades. Gold transfers, foreign exchange settlements, and sovereign guarantees formed a complex financial machinery intended to stabilize Europe. But the machinery was fragile. Governments changed. Economies collapsed. Exchange rates shifted like sand under pressure. Someone needed to manage the system. And so, in January of 1930, an agreement among several major powers created a new institution in Basel. It would be neutral, independent, and permanent. The Bank for International Settlements was born. Its initial purpose seemed straightforward: administer the flow of German reparations and facilitate cooperation between central banks. But institutions have a curious tendency. They evolve. As the Great Depression unfolded across the globe, financial crises forced governments and central banks into increasingly complex coordination. Gold reserves had to move between countries. Emergency loans were negotiated. Currency stability required constant communication. Inside the BIS headquarters, central bankers began meeting regularly. Quiet meetings. Closed meetings. Meetings where monetary officials spoke candidly about the fragility of their national economies. What began as a technical clearinghouse slowly became something more significant. A forum, a network, a place where the guardians of national currencies could coordinate policy beyond the turbulence of domestic politics. And through those meetings, patterns began to form. Patterns in how crises were managed, patterns in how currencies were stabilized, patterns in how financial institutions communicated during uncertainty. It wasn't an error. It was a protocol, a pattern. The headquarters of the Bank for International Settlements itself reflected that philosophy. Basel is not a financial capital like New York or London. It is quiet, precise, almost deliberately understated. Yet within its conference rooms, governors from institutions such as the Federal Reserve, the Bank of England, and the European Central Bank gather regularly to discuss the future of the global financial system. There are no dramatic speeches, no televised debates, just policy discussions, data presentations, and the careful language of monetary stability. Some historians describe these meetings as the most important financial conversations that most people never hear about. And the BIS itself functions almost like a central bank for central banks. Member institutions deposit portions of their reserves. The BIS provides banking services tailored specifically for monetary authorities. Gold can be stored, transferred, or swapped between central banks. Financial research is conducted on everything from inflation trends to systemic risk. Over time, the institution also became a central hub for regulatory coordination. In the late 20th century, a committee based at the BIS began developing global standards for banking regulation. The result was a series of frameworks known collectively as the Basel Accords. These agreements helped shape capital requirements for banks across the world. They influenced how financial institutions measured risk. They shaped how banks managed their balance sheets. Once again, the pattern repeated. A quiet institution, a technical framework, a protocol adopted by dozens of countries. It wasn't an error, it was a protocol, a pattern. During periods of financial crisis, the importance of these relationships becomes especially clear. When liquidity tightens or markets panic, central banks often coordinate their actions. Interest rate policies, emergency lending facilities, currency swap lines designed to stabilize global markets. These tools may appear suddenly in headlines, but behind them lies decades of institutional communication. And much of that communication has historically passed through Basel. The city itself has become synonymous with quiet financial diplomacy. Unlike political summits, these meetings rarely produce dramatic announcements, but they create something arguably more important: trust between institutions responsible for managing national currencies. Trust allows central banks to act quickly when crises emerge. Trust allows them to coordinate responses across borders. And the scale of its operations reflects that influence. The BIS manages hundreds of billions of dollars in reserve assets. It conducts economic research used by policymakers worldwide. It hosts committees where regulators develop frameworks affecting thousands of banks. Yet the institution itself maintains an unusual level of discretion. There are no retail branches, no advertising campaigns, no public customer base. Its clients are institutions. Its language is policy. Its product is stability. And stability, in the realm of global finance, is one of the most valuable commodities in existence. Because behind every currency lies something fragile. Confidence. Confidence that money will hold its value. Confidence that banks will remain solvent. Confidence that governments will honor their financial commitments. When confidence breaks, financial systems can collapse with startling speed. The 20th century witnessed several such collapses. The Great Depression, the breakdown of the Bretton Woods system, the financial crisis of 2008. Each event forced central banks to reconsider how they cooperate, and each time the Bank for International Settlements played a role in facilitating those discussions. Not always publicly, not always visibly, but consistently. Some critics have occasionally questioned whether such coordination grants excessive influence to unelected financial institutions. Others argue that global finance simply requires technical cooperation beyond national politics. Historians tend to approach the question differently. They look for patterns. And the pattern here is clear. When the global financial system becomes more complex, institutions emerge to manage that complexity. The BIS is one such institution. Exchange data, where the architecture of monetary stability is quietly maintained. It wasn't an error. It was a protocol, a pattern. Today, the BIS Tower rises above Basel like a symbol of institutional continuity. Inside, economists analyze global markets. Committees debate regulatory frameworks. Central bankers discuss inflation trends and currency pressures, and the ledgers continue to grow. More data, more meetings, more records waiting quietly in archives. Because history is not always written in dramatic events. Sometimes it is written in meeting minutes, in policy drafts, in the careful handwriting of financial clerks who never imagined their work would one day become part of a global story. At Erased Fortunes, we believe those records matter, not because they reveal hidden conspiracies, but because they reveal something more subtle. The slow construction of institutions that quietly shape the world around us. And perhaps that is the most important lesson hidden within the archives of the Bank for International Settlements. Global finance is not governed by a single dramatic decision. It is governed by patterns, protocols repeated across decades, conversations held behind closed doors, agreements written in precise legal language, and ledgers that never truly disappear. They simply wait for someone patient enough to read them again.